In recent years, environmental, social, and governance, or ESG investing, has become one of the hottest topics in the finance world. BlackRock and Vanguard have expanded their ESG-focused funds. The European Union has launched its CSRD directive, requiring ESG reporting by large firms. Even the CFA launched its ESG certificate. So this is a significant trend that will stay in the years to come. ESG is a framework that helps stakeholders understand how a company's business affects society. The main goal of financial reporting is to depict business performance. Large corporations, however, can impact society beyond financial performance, including their environmental footprint, social contributions, and governance practices. Hence the need for ESG reporting. Clients today are not simply interested in buying products that satisfy their basic needs. They want to buy from companies in the business of doing good. It isn't surprising that these same people want to invest their savings in companies that align with their values. This shift in consumer and investor behavior has led to the rise of ESG investing, in which financial returns are evaluated alongside a company's ethical and sustainability practices. But this makes sense from a business perspective too. If consumer demand for ESG-focused businesses continues to grow, these companies may ultimately deliver superior financial returns compared to those that do not adhere to ESG best practices. This is why institutional investors expand their ESG-focused funds. One example of an ESG champion company is Patagonia. Patagonia is widely recognized for adopting ESG best practices in its business model. Regarding its environmental footprint, Patagonia uses sustainable materials, commits to carbon neutrality by 2025, and donates 1% of sales to environmental causes. In addition, the company wants to ensure its social impact is beneficial by ensuring fair labor practices and supporting employee well-being. Finally, Patagonia is structured as a B Corporation, and ownership of the business has been transferred to a trust to ensure its mission-driven approach continues. At the same time, when ESG factors are not handled properly, they can significantly burden a firm's operating and financial performance. Do you remember Volkswagen's Dieselgate scandal? While VW promoted itself as an environmentally responsible automaker, it was later discovered that the company had installed software in its diesel vehicles to cheat emission tests. They falsely claimed cars met emission standards while emitting up to 40 times the legal limit of nitrogen oxides. The fact that consumers and regulators were misled damaged trust for years to come. Even today, Volkswagen's stock trades at a surprisingly low price-to-earnings multiple. So why pay attention to the ESG trend when investing? As a financial analyst, ignoring ESG investing means missing critical risk factors and growth opportunities and shifting investor priorities. Companies integrating ESG effectively often outperform in the long run due to regulatory advantages, cost efficiencies, and stronger stakeholder trust. One of the most well-documented cases of ESG-driven outperformance is Orsted, the Danish energy company. In 2008, Orsted, then DONG Energy, heavily relied on fossil fuels, with coal making up 85% of its energy mix. Recognizing the regulatory, reputational, and financial risks associated with fossil fuels, the company shifted aggressively toward renewable energy, investing in offshore wind farms and phasing out coal. This ESG-driven transformation paid off. Between 2016 and 2023, Orsted's stock price increased by more than 300%, significantly outperforming traditional energy companies that failed to adapt to the clean energy transition. Investors rewarded Orsted's strategic shift as it reduced regulatory risk, accessed green subsidies, and positioned itself as a leader in the growing renewable energy market. In today's environment, ESG investing is a fundamental component of a financial analyst's toolbox. If you're interested in acquiring the skills needed to become a world-class financial analyst, you can check out the 365 Financial Analyst program we've created. There's a link in the description of this video. It will teach you the skills and best practices to enter a financial analyst job and be a rock star from day one.